Hello and welcome everyone to this week's COT review. I'm Thomas from COTBase.com. Today we're going to have a look at the 30th COT report of 2018, and as usual we're going to start off with the changes in commercials positions. But before I go into the review, a reminder, we've got two new services out, futurestradingguides.com, focusing on futures markets, and fxtradingguides.com, which focuses on forex markets and also cryptocurrencies. So if you haven't yet checked these out, please do so. So back to the review, and starting off with the dollar index, where we have this huge 20% change in commercials positions, 18 in large speculators, much greater than average. Of course, we have seen even greater changes in the past, a few times, maybe once or twice. So the change is definitely pointing downwards, suggesting that there may be a bit of a decline early next week in the dollar index. Looking at the extreme, you may see that we're moving away from a bullish COT extreme in the market. Slowly and steadily, we are getting closer towards bearish extreme levels. Currently, we are at a 57 report extreme, both in large speculators and commercials. Of course, as you can see on this 5-year chart, we're pretty much away from those really large bearish extremes. Moving on to CocaCola, which is our next market, with a 13% change in commercials positions. You can see that change size over there. Here we are talking about a bullish COT change signal, indicating a possible rise in the market in the next couple of days. Jumping to a 5-year chart, you can see that the last major extreme was this bearish one, just coinciding with this top over there. Since then, prices have declined, and if you look at the chart, we are pretty far away from significant bullish extreme levels. So we may see the continuation of this decline in cocoa. Natural gas is our next market with a 10% change. It is a bullish COT change signal, but I wouldn't say it's that large. It could be larger than average, but if you look at the chart, we have seen greater changes many times. So I'd jump over to the 5-year chart and see whether there's an extreme or not. Well, there may be, we may call it a relative bullish extreme, but nothing too unusual. I would say that the last major extreme was this bearish one back over here in mid 2017. There was a significant bullish extreme in the market late last year, and that's all. So I wouldn't be looking at natural gas from a COT data perspective right now. Rather, moving on to other markets might show us better options, better possibilities for us. So let's start off with coffee. Here we have all-time COT extreme, not only in large speculators but also in commercials positions. Huge bullish COT extreme. For those of you who are new to COT analysis, all-time COT extreme means that never in the COT history of coffee were traders of this market at such extreme levels, meaning large speculators have never had such net short positions, over 60,000 contracts net short and almost 60,000 contracts net long in the case of commercials. So this suggests that this decline in the coffee market is eventually going to stop. It may have already stopped if this was the bottom. Later on, of course, in the couple of weeks or month time, it would be easier to identify the exact bottom. The COT data simply helps us by measuring the stress level in the market, which is unquestionably high right now in the coffee market. Moving on to Swiss franc, where we have a 577 report extreme in large speculators. The exact same extreme is visible in commercials. We have a bullish COT extreme in the Swiss franc, suggesting higher prices coming in the next couple of weeks or month. We may need to wait a little bit longer. Of course, these COT extreme signals do not necessarily take effect very suddenly. It's just an equipment for measuring stresses in the market. Australian dollar with 137 reporting extreme and large speculators is our next market. You can see that extreme on the chart over here. Again, we are talking about a bullish extreme, similarly to the Swiss franc. Of course, we shouldn't be surprised after having a look at the dollar index, which was showing us a little bit of bearish signs, both from the COT change signal and also the extreme. So again, a market where we should be expecting higher prices coming. So that was all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.